Wednesday the 3rd, good morning. This is what's going on. Trump's tariffs are back. Europe is looking at a proposed rate of at least 10%. Iran and the United States exchange fire in the Gulf. The ceasefire apparently, though, is still holding. Oil is up. I think it's the third day up. And SpaceX is reportedly looking to sell its shares next week at $135 each. That's an IPO valuation, Tom, of at least $1.8 trillion.
Yeah, and tech was certainly there in terms of the gains that came through on Wall Street yesterday and in the European session as well. Today, European futures pointing lower by 0.2%. Oil is part of the risk-off move, with prices up 1.7% on Brent on those renewed tensions, of course, in the Middle East and Iran and the Straits of Hormuz. We keep an eye on the Japanese currency. Of course, we get more budget details and additional budget detail coming through from the Japanese leadership, but also intervention watch, 159.92 right now on the Japanese currency. The countdown to the opening trade starts right now.
Good morning, everybody. This is the opening trade then, Wednesday the 3rd of June, and we're dealing today with some continuity topics in the shape of AI and Iran, and some retro themes that are coming back to the markets in the shape of tariffs. So let's start with the retro theme. President Trump and the White House are back to their global charm offensive around tariffs. 10% is the number being mentioned this time, and most partners are going to be subject to this. The US administration alleging forced labour, not that forced labour is taking place specifically in Canada, Mexico, EU, UK and all the other countries named in this particular Section 301 investigation, but that maybe these countries have not done enough to tackle imports that rely on forced labour. That is the suggestion from the US administration. And these are Section 301 investigations, so if they come to pass, this is just a suggestion at the moment, they're seen as not temporary, that they would replace some of the temporary provisions we've seen put in place ever since the Supreme Court overturned Trump's original plans with regard to tariffs. But where does this leave all of the existing tariff arrangements? China just went to all the trouble to arrange that board of trade with the US. We've seen the European Parliament just yesterday approve the Turnberry deal, at least provisionally, through the European Parliament. So where does it leave all of those? All of that remains pretty unclear right now.
I don't know. I feel like we've got a bit more clarity now. This is more clarity than the 122, which can last 150 days. So we've got that clarity. I think China's the big loser here, because it's what is being put on in terms of the 301 is a supplement to the existing tariffs that already exist. So their rates are going up. Europe is, 10% at least? So at least we have some degree of clarity around that. I don't know. This feels like at least we're moving out of we don't know what the Supreme Court's going to do. We know that 122 can't last. 301 feels like it's a bit more stable. If I was a business trying to figure out what I'm doing here, 301 feels like it's probably the most stable foundation I've been on for quite some time when it comes to tariffs.
There's a consultation period.
Yep.
And typically we watch for the European response. Anna was pointing out that we are close to getting that deal finalised, finally, from at least the US perspective. Does it derail that? Probably not, but they could take a legal challenge against this. They could start negotiations with the US. And I guess the nuclear option for Europe would be to say, hang on a second, this trade deal that we're about to lock in, we're going to put a pause on that. That seems unlikely, given the nature of the 301 tariffs. But we watch for the Europeans' response. We watch for the UK response to this.
I mean, is this better than Turnberry? I mean, Turnberry put a limit of 15%. As the top rate, but then there was a lot of detail around US industrial goods, some agricultural products, and again, this list comes with its own host of exemptions. So there is still some complexity to work through.
So there are single sectors that may become a problem. I still think this is my biggest concern around all of this is what happens in terms of the Chinese relationship. Is that what is ultimately destabilised by this? Let's talk about talking of destabilisation. Let's talk about what's happening in the Gulf. We have seen missiles fired across the Gulf once again at targets in the GCC. Largely, it looks like these have been ineffective. It looks like there hasn't been much damage caused as a result of this. In theory, the ceasefire is still holding. In theory, the ceasefire is still holding. We had API data out yesterday. Massive draw in the United States. What was it? 6.8 million barrels down again. We get EPI. We get the EPA data today. Get my acronyms right. And that's expected to show a massive draw as well. basically, we seem to be in a situation where nothing is changing in terms of the situation on the ground. Some ships are getting out, we understand, but it's not enough really to change the narrative around these big draws that are coming and what that will ultimately mean at some point in the very near future to the capability of the world to have enough oil and for oil prices not to go sharply higher.
Yeah, a bit of a change of tactic from the US in trying to get a few more ships out. But as you say, this doesn't really scratch the surface in terms of global supply. But they are trying to do it slightly more covertly. So this is sort of Project Freedom, but with a lower profile, it would seem. Although some of the attacks that the Iranians launched overnight were apparently at some civil vessels. Yeah,
the Defence Secretary has hinted at this, hasn't he, Pete Hegseth, and there is coordination with vessels and some of those shipping companies trying to get vessels through. The inventory story, the new timeline seems to be, if you look at the analysis from the likes of the Brookings Institution, that maybe your mid-July is when inventories draw down completely. The EIA in the US on that inventory piece. The Energy Information Administration has said that the inventories are drawing down at 8.5 globally, 8.5 million barrels per day. You just talked about more than 6 million just in the US.
That was
itself.
the API data from yesterday.
Yes.
These are big numbers.
These are significant numbers. So mid-July, August. That's got to factor into how President Trump is thinking about trying to get this deal across the line.
The other thing about the ships coming out is they're not going in. This isn't normal two-way trade. So we're just getting the oil that is already on tankers out. At some point, presumably that floating storage, which effectively it is, will come to an end.
Relief for the crews. Let's talk about what's going on in tech, shall we?
You've been talking about familiar themes and retro. Tariffs are retro. Tech is a familiar theme, of course. But just to kind of size and scope, and we have a chart that shows this, because, again, yesterday, fresh record highs. It's 24th record high year-to-date for the S&P 500, and it was semiconductor and chip names once again at the vanguard. The likes of HP and Marvel also performing very strongly. But the SOX now, so the semiconductors index, putting its best year-to-date performance in on record, up about 94% year-to-date, the semiconductor story. Jensen Huang has been playing his role as a catalyst. The speech, of course, making a nod to Marvel, for example, suggesting that could be a $1 trillion market cap company. But again, there seems to be nothing getting in the way of the chip trade right now.
Yeah, SpaceX, really interesting part of this as well. Are they going to adopt a pretty traditional path around pricing, marketing, the roadshow for the IPO, or are they just going to come out with a price? Because normally you get a range of prices, and our reporting suggested that you're going to get a range of prices perhaps as early as today, then you go off on a roadshow, and then you get a price around June 11th, but other media reporting that actually they might already have settled on a price. And just another area where this might not be your typical IPO.
Doesn't feel like it's a typical world that we live in.
Writing its own rules.
Yes, and also going to the banks and saying, we're not paying your fees in the way that normally we would. We want a big discount, so it's going to be quite thin fees for the banks. They're still going to make quite a lot of money. Just back in terms of the Middle East story, Kuwait is now reporting that an Iranian attack has significantly damaged an airport building there, and we did see some diversions earlier. We'll come back to that story a little bit later. What we've got on the show for you, we are going to talk about the US economy. Jonathan Pingle, UBS's chief US economist, is going to be here. We'll have that conversation shortly. Nataliia Lipikhina, JPMorgan Private Equity Bank, EMEA Equity Strategy Head, is going to be joining us. And looking forward to this last conversation. Brian Gu, Xpeng's president and vice chair, is going to be joining us in the second half of the programme, Tom.
Here's what else we are watching throughout this Wednesday. The OECD Ministerial Council meeting kicks off in Paris. We'll be across that for you. The Bank of Japan Governor Kazuo Ueda, of course, is due to speak later today. We have the extra budget as well expected through Parliament, at least possibly being passed by Friday. We'll get more details later today out of Japan. We're going to get some US economic data as well, including ADP. Three big sets of jobs data out of the US. We had one of them with job openings yesterday. ADP, employment change, factory orders and durable goods as well. The JOLTS survey came in pretty strong in terms of the number of job openings. Yesterday, 7 p.m. UK time, it's the Fed Beige Book, so a little bit more colour there as we continue to assess the next move for this Federal Reserve. And aftermarket on the earnings front, again with a focus back on the chip space with Broadcom earnings.
Let's talk about Japan, because it's 2 days in a row, I think, I've woken up. I thought it was Groundhog Day this morning. I saw comments from the finance minister in Japan saying we are ready to respond on FX. And we heard something similar overnight the night before as well. So, that, is that building towards something, or is that just the standard commentary we get from the administration there? Interesting that she was asked as well about monetary policy and whether that is the thing that needs to change to lift the value of the yen. And she said that there are lots of things that she shares views with Ueda on. on. So
He's
maybe
talking fairly soon, we think, this morning.
sometime today. Yeah,
some point
exactly.
today. We won't go through. We're not going through 160, 159.93.
Yeah, it's holding that line.
It's
isn't
really
it?
holding
Very
that
firmly.
line.
It doesn't want to cross above that 160 level.
So there's definite fear in the market that we will see intervention were you to go through that level once again.
They're having to spend more and more as they intervene.
Yeah.
Is the data that we've been getting in terms of trying to support the currency.
And
the extra budget, they say on our reporting, they're doing some. It seems they're doing some clever accounting. So bond issue. So a $19.4 billion equivalent additional budget from Japan to kind of soften the blow of higher energy costs. But in terms of bond issuance on a calendar basis, that won't be increasing.
Yes.
So whether or not that assuages.
I'm looking forward
the
to
bond
our team in
markets.
Japan explaining that to me later on today, because it does seem as if, something confusing happening there in terms of that extra budget. But it's interesting that the intervention so far, if you just measure it on what the yen has done, do you say that's not worked? I mean, is it difficult to get it to work at a time where there's war in the Middle East and the dollar is the beneficiary of that? We see that once again today. Oil prices are higher and the dollar is up by another 0.1%. It seems difficult to push against that global
But they have drawn a
narrative.
line, it seems. So there is this kind of 160. Don't go any further than 160. So the market is at least holding
So is that the definition of working?
Is that working? I
Yeah.
don't know.
Is that what they wanted to achieve?
At least they've drawn a line kind of under it. Whether or not they get a better result with other factors, I don't know.
11 minutes past 7 here in London. Coming up on the programme, private credit is facing pressure once again. Cliffwater forced to cap redemptions at one of its funds as investors look to pull shares. We've also had news out of partners as well on that same subject. We will get to that a little bit later in the programme. Plus, we will look at the stocks to watch at the open, including Inditex. That's after the Zara owner reported sales growth that picked up at the start of the second quarter. So it's the most recent month. That guidance seems to come in pretty favourably for the business. We'll also not lose sight of the tech themes this morning. Richard Windsor will be with us, founder and owner of Radio Free Mobile. He has a lot to say about the events that have been taking place within the industry in Taiwan. And if you have any questions, if you want to get involved, please do. IB plus BBTV Go is the function to use on the Bloomberg terminal this Wednesday morning. This is Bloomberg.
Wednesday morning, good morning. 44 minutes to the equity market open here in Europe. The picture looks a little red, but not much. We're down by 0.02% across the board when it comes to what is happening with the European equity picture. Yesterday, the story, once again, stateside dominated by what is happening in the tech space, and that continues today. We're going to get Broadcom results a little bit later on. We are also continuing to track what is happening with these huge IPOs and capital raises that are coming towards the market at pace. Reuters is now reporting that SpaceX is seeking to sell shares at 135 apiece, raising 75 billion at its IPO. It's going to be a huge number in terms of total market cap. Bloomberg understands the company is planning to set the terms of its record-breaking share offer as early as this afternoon. Richard Windsor, founder and owner of Radio Free Mobile, joining us now. He's been attending Computex. We'll get to that in just a minute. Richard, we are getting some big IPOs coming towards the tech world at substantial size. Do we have the capacity to absorb all of these big numbers? They're all coming at once.
It's a good question. I think the answer is yes. There's still plenty of cash sloshing about in the system and a lot of cash looking for a home. The big question is whether or not that cash is willing to pay the valuations being asked. That is a much more relevant question. And certainly in terms of the big question mark for me will be OpenAI's IPO. They're expecting to continue to burn cash for a very long period of time. And if there's a risk of the market refusing to pay a high valuation, I suspect OpenAI is the one that's the highest.
OK, do you want to go in terms of the sequencing, therefore? It looks like it's going to be SpaceX, Anthropic, then OpenAI. Is that going to be a problem?
I think potentially yes, because there's going to be a strong contrast between Anthropic and OpenAI. Now, the problem with Anthropic is we don't have the publicized S1 yet, so I haven't been able to look at the numbers. But as far as I can tell at the moment, Anthropic is close or has already beginning to start to make money on the services that it has, whereas OpenAI is continuing to burn money. And so that could create a strong contrast with a high valuation for Anthropic, but yet it's making money, making the market a bit happier. Here comes someone else not doing as well, asking for a very high valuation. and burning money for a long period of time. So I think the risk is increasing that the market refuses to pay the valuation for OpenAI.
That's interesting, Richard. So valuation is and the sequencing of these IPOs is certainly something that we watch then. What about some of the other details around how these companies come to market that could be of interest? For example, the percentage of the business listed, the lock-up periods applied, the percentage that's designed to go to retail rather than institutional investors. What are you watching there that will have a bearing on your enthusiasm for these offerings?
Well, to be honest with you, it's not so much the investor side. It's more the fundamentals of the businesses and their long-term outlook that I think is going to determine the outcome here. There is lots and lots of interest from retail. We've seen retail, certainly in the United States, retail is becoming a much more important segment of the overall market, somewhere between 20 and 30% of the market. And so from that perspective, it's still, for me, down to the fundamentals. Now, if you look at SpaceX, I've been surprised by the possibility of putting data centers in space. I'm not saying all the problems have been fixed, but I've been surprised positively by the economics. I've been surprised positively in Anthropic's ability to grow revenue on very limited capacity. And so what also is going to happen, the order is very important when it comes to these giant IPOs. You want to be first because that's the one where there's going to be the most demand.
OK, so it is right to think of this as a race then, and the order does matter. Let me ask you about what's been going on closer to where you are and where you've spent the last few days, Richard, around Taiwan. Agentic AI, you tell us, is part of the conversation, or very much part of the conversation, and crucially, operating agentic AI on the edge devices rather than on the distant cloud. And this is something that at Radio Free Mobile, I know that you've been talking about before. What does that tell us about where the investment themes around AI go?
Well, what it really means is that the AI market is developing largely as we have anticipated. The reason being for that is right from the beginning, it's always been obvious that if you can run your AI as a service provider in someone else's device rather than your own data center, you're going to make more money because you don't have to pay for the compute that makes your AI service work. What's happening now is that as the AI gets a bit better and it's starting to become more credible that you can have an agent that do things on your behalf, it's obvious that you're going to want to run it locally rather than in the cloud, because if you're moving around, you're going to want to have access to that agent all the time, even if you lose connectivity. And when it's in your own device, you've got better scope for data security, privacy, and also what's going to be really important in terms of the quality of the user experience is personalization. Your agent, if it doesn't know you and what you want and what you prefer, it's not going to be a very good agent at all.
Richard, good morning. Are you seeing more evidence that the users of AI are getting more revenue per gigawatt from these data centers?
Some, yes. This is a key metric for me. Right now, the industry standard is $10 billion per gigawatt. At current levels, you're going to struggle to make an economic return. OpenAI has been stuck there since 2023 and has not moved. However, this is why I'm getting more positive in Anthropic. Anthropic seems to be moving into round about $20 billion per gigawatt. And by my calculations, you can make a good return on that, even if you spent $60 billion buying NVIDIA's equipment for a 1 gigawatt data center. Also, another company called Nebius is also showing some evidence of perhaps being able to bring that number up in terms of revenue per gigawatt. And so that would also help its profitability. For me, this is the key thing to watch in terms of whether or not AI is going to make money, is this revenue per gigawatt number.
And in terms of shout-outs from Jensen, I mean, again, he was sprinkling the stardust for a lot of companies. I mean, Marvel was front and centre in terms of that call from Jensen Huang that it is going to be a $1 trillion market cap company. Who stood out to you from Computex, Richard, as the winners and losers?
Well, I mean, Jensen did a couple of things. The first thing he did is he blew up the SaaSpocalypse story. So obviously ServiceNow, Adobe, both of which I own personally, and Salesforce, and generally the sector has been a winner from this. I think also Qualcomm and MediaTek, Qualcomm again, which I own personally, for exactly this theme, because NVIDIA is now so important and so big that when it's headlines a conference, it sets the tone for that conference, and now everyone is talking about and looking at putting agents on devices, which means processors that can run AI efficiently, which goes straight to both Qualcomm and MediaTek strengths. The loser, as far as I can see so far, has got to be Intel, largely because both Jensen and all of his competitors and his partners have spent a lot of time at Computex basically saying our products blow x86 out of the water when it comes to performance per watt, which is key to the economic. And unfortunately, Intel's response to that yesterday needs more convincing to get me on the bandwagon that Intel is actually on the road to recovery.
Great to catch up, Richard. Thank you very much indeed for your time this morning. Richard Windsor, founder and owner of Radio Free Mobile. So, Wednesday morning, what else do you need to know? Let's talk about some of the other details we're following. Bank of England policymaker Megan Green says the case for raising interest rates is strengthening as the Iran war continues. Green, one of the BOE's most hawkish voices, says a prompt increase in borrowing costs may be necessary to keep inflation expectations in check. She stressed that the speed of the response to the threat is as important as the size of the response to the threat. New signs of enduring pressure in the private credit markets. Cliffwater's flagship private credit fund capped redemptions at 5% in the second quarter after investors looked to pull about 17% of the shares. That's according to a letter seen by Bloomberg. The prior quarter, investors got back around half of the roughly 14% they asked to redeem from the $31 billion Cliffwater corporate lending fund. Similar story. Partners Group is capping withdrawals at one of its evergreen private equity funds amid heightened redemption pressure. The Swiss firm told investors in a letter seen by Bloomberg that it's also limiting redemptions to 5% after withdrawal requests surged to an estimated 9.8% in the second quarter. Partners Group is one of Europe's largest listed alternative investment managers with around $185 billion in assets under management. Shares have declined around just over 16% this year. I'm not sure this story ever went away. We're just getting the latest quarterly data, basically signalling that it's ongoing.
Yes, it's ongoing, but I think it's interesting that they do seem to be coalescing back around the 5% level, because Cliffwater had previously gone to 7%, but then S&P downgraded one of their funds and said, no, the 5% level matters. And so now the industry perhaps holding a little firmer on that 5%.
Yeah, at the start of this story, this was a question of how these different funds were reacting to those redemption requests. And now it seems the gating back to 5% seems to be what the majority are now doing. I wonder, this is speculation, but whether or not we tie this to the IPO story and whether this is an example of investors want to get some liquidity so they can get that exposure to some of those mega IPOs.
And Bitcoin. Retail investors.
Are people selling Bitcoin because they want to get access?
It's not a huge stretch to imagine that the SpaceX IPO might appeal to a similar retail crowd.
See, that one I find more credible than that one, in as much as the redemption story started quite a long time ago. Yeah. And it's felt like it's been, while we've been ignoring it and we focused on the Gulf and what's been happening in tech, it has been ongoing, that sort of persistent withdrawal story from late last year.
The software story seems to be morphing a little as well from the real worry about software, which is linked to the private credit story. That's a bit more nuanced now, it seems.
Richard Windsor was stressing that it's becoming more granular. We're starting to see the winners and losers. It's not just a broad brush, all software is going to fail. You're getting some winners and losers as well. Coming up, President Trump's tariffs then looking to make a comeback. We'll discuss that with the chief US economist, Jonathan Pingle. That's coming up. This is Bloomberg.
$29 minutes to go, then we're going to have the opening trade, then European equity markets are going to be open. At the moment, it's a fairly negative picture. The interesting standout actually this morning is the IBEX. I wonder whether Inditex, its numbers, the Zara owner just crossing, will have an impact on that market this morning. But elsewhere, we're down by 0.3% of 1%. Stateside, we are flat. Current futures on the S&P and the Nasdaq, both barely budging. versus yesterday's close.
Yeah, you're absolutely right. The IBEX 35 futures picture is positive, isn't it? Which is, as you say, standout. Let's go to the bond market story, where we do have, they're all coalescing around the same story, and that is of slightly higher yields this morning, up by 2-3 basis points at the 10-year horizon. Oil prices are a little firmer. 97 is the handle on Brent this morning, as we watch that just ticking and ticking higher this week as we increasingly on an ongoing basis, wait for further progress on any kind of deal.
Yes. So from Iran to what's happening in terms of tariffs. Tariffs are back. The US proposing new tariffs of at least 10% on imports from major trading partners following an investigation into goods allegedly produced by forced labour. The move comes as President Trump, of course, seeks to rebuild his sweeping tariff wall after they were struck down by the Supreme Court back in February. These tariffs are potentially going to impact the UK and the EU, amongst others. We're joined now by Jonathan Pingle, Chief US Economist at UBS. Jonathan, fantastic to have you in the studio with us. Thank you for joining us bright and early this Wednesday. Is there any material impact on the US economy as a result of this? Does it change your forecast for the US economy in terms of fiscal or in terms of potential retaliation from trade partners?
Well, I think the main thing it does, it's not really going to change our forecast, but there was an element of sort of what happened to the tariffs, right? Like we'd all been, it was almost like the White House had become distracted from this core part of their, last year's economic agenda, letting it sort of fall by the wayside. But I think this is a reminder the tariffs are here to stay. I mean, when the Supreme Court ruled against the president's use of IEPA to impose the tariffs, they moved to another authority to put in place a 10%, and then there was a threat to go to 15%, but they never really followed through. We were sort of wondering where these investigations are. I think this sort of keeps the plan back in place when many of us had wondered whether they really felt the motivation to continue on this agenda, but clearly they do. And I think the other interesting thing is we thought this would be more targeted nation by nation, but it sounds like they still want to use very sweeping authorities to apply tariffs to a wide range of trading partners.
Guy is very worried about how China will react. Is there a potential derailing of the détente that we've seen between Beijing and Washington? Is that something investors should be starting to factor in again?
Well, I think we're always going to have this potential for tension in the U.S.-China relationship. I think there's just going to be a structural element of that strategic rivalry. But at the same time, that Trade Representative Secretary Greer had Ambassador Greer, had announced the Section 301 findings, about child enforced labor. They also have launched the this board of trade idea, and they've put out a proposal for public hearing. So I do think that they are following through with some of these cooperative elements of what came out of the summit with the president. But I think there's always going to be this tension. We do have a massive trade deficit. There are sources of tension geopolitically. So I think we will have these periodic senses of concern. But I think the message out of the USTR right now is sort of building on the momentum out of the summit.
Can I ask you about a lot of the work you've been doing on AI and what it does to the US economy? And this maybe takes us closer to then what does the Fed do next? What does Kevin Walsh mean for Fed policy? Because you've been looking at the impact of AI when it comes to growth, and we've seen a lot of that on the CapEx spend right now, what it means for labour. And you say some intriguing things about this is labour displacing. But in the end, do we just see a lot more churn? Explain to me how you see this playing out for the US labour market.
We had a lot of elements of this in the 1990s, and I think it was sort of underappreciated how much labor was displaced, in particular in sectors where you don't necessarily think of the internet, but like in manufacturing in particular. We went through an 8-year period where for the same level of output, you could have gotten rid of a third of the U.S. manufacturing workers, and this was before the China shock. And I think you're going to see that kind of displacement out of AI and potentially more rapid. The question is whether or not AI opens up new opportunities, and there are other things going on in the economy that at least keep job creation much more dynamic. That has typically been the historical experience. But as we go through these historical experiences, that aggregate outcome may sound great, but under the hood, there's still a lot of people being displaced out of one industry, forced to move to the other, and then there become questions of who are the winners and losers, how do we facilitate those transitions, and sort of the other problems in the adjustment.
Because that then takes us on to Kevin Walsh, because he cited AI as one of the reasons why he thinks, and I'm paraphrasing here, but he thinks we can have lower interest rates in the United States. But how does that stack up for you? And do we have to think about the time horizon over over which AI has an effect on inflation and jobs.
No, that's exactly right. And in fact, it's one of the few sort of really repeated themes in Kevin Warsh's communications over the last 2 years. It was in his Wall Street Journal op-ed, in his testimony, his media appearances last summer. He really does seem to be part of the supply-side ecosystem that looks at AI as this potentially next disinflationary force. But I mean, to your point, if I look at our inflation forecast, we've got 20 basis points of our year-ahead inflation forecast is the knock-on effect of the data center build-out.
Because memory chips.
Memory chips going up, software, all these other prices are being pushed up. And many of these chips go into other stuff, like your washing machine has more chips than you would realize, right? So there are these near-term knock-on effects. But I do think this is going to be something Kevin Warsh leans on as chair, as a potential future disinflationary force that you don't want to restrain today's investment that's going to give you tomorrow's price stability.
I'm confused by Kevin Warsh on inflation, to be honest. I hear the Greenspan 2.0 argument, I hear, and Greenspan took a punt, and maybe Warsh feels like he can do the same thing with AI. But on the other hand, I also hear him talking about inflation as being the primary goal of the Fed. It feels like he's less convinced by the dual mandate. Is that right? Jean-Claude Trichet used to talk about having a single needle in his compass. Does Warsh have a single needle in his compass? And is it inflation?
We don't know. I mean, he has talked about that before. I mean, certainly, I mentioned earlier, I was on the staff when he was a governor. He was relatively hawkish early on in his career at the board and has periodically come back to that. The recent statements, however, about AI as a reason for, not necessarily hanging on to these sort of canonical frameworks, though, might indicate that he's somewhat more dovish today than he was before. I don't think he's alone, though, in sort of prioritizing the inflation mandate. I think even Jay Powell, to some extent, would tell you that you need stable prices if you're going to end up with maximum employment. But, we'll see. There is, certainly there is a conservative part of, his background and at Hoover Institution that, would prefer a single mandate as opposed to a dual mandate central bank.
He wants to get out of the way. It seems he wants to take the Fed out of the way of kind of a lot of things. The Fed's been an integral part of the U.S. economy, the integral part of the financial markets since Greenspan, really, since the Greenspan put, and certainly Bernanke if equity markets rolled over, would he stay out of the way? Like, what does this look like? What does a Warsh Fed look like if we get financial turbulence?
Yeah, there's an element of, good luck.
Yeah, well, sure.
Yeah. No, I mean, the Fed's never really been able to get out of the way. I mean, it was designed in after the financial crisis of 1907, but it was the Fed that pinned interest rates when we needed to finance the World War II debt. It was the Fed that, worked with the banks to bail the commercial paper market out when that market failed in the 1970 recession. I mean, whether it was Continental of Illinois, I mean, just go down your list, and the Fed has been an integral part of both the lender of last resort function as well as playing a role in financial markets. And I don't think the current structure of financial markets in the U.S. economy today can manage a Fed that just simply becomes removed. And Kevin Warsh is going to have the problem where if he is not out in front, he's got 12 regional Fed presidents who aren't going to stop talking. They love.
He'd like them to stop talking.
Oh, he would, don't you think?
Yeah.
Yeah. But
is that going to be that might be part of it? Some different communication strategy, do you think? I mean, the dots, maybe that's to be discussed, and maybe alongside that, how much they appear in the media, how much they talk, because he doesn't seem to value that kind of.
Honestly, what are we going to do if we don't come in every morning and there's like a Fed governor that's given us something to
Was there a time before forward guidance? I don't know.
Well, I mean, there was a different media landscape back during the early Greenspan years. Right now we have a 24/7 news cycle, and it's a great news cycle because you got shows like yours. But if I think about what Kevin Warsh wants to do, I mean, I can see why he wants to do that, but it would require corralling all those 12 regional Fed presidents who are quite independent. They have their own independent boards. Many of those boards want them out in the public. They want them on TV. They want them promoting their districts. And I don't know how he stops it. And if he tries to curtail his voice, then all he becomes.
They're just going to talk more.
Exactly.
We used to watch Greenspan's bag. Like, how thick was it as he walked down the road? That was the kind of. It was a whole different world. Anyway, we'll see what happens next. Great to see you. Please stop by any time. UBS's chief U.S. economist, Jonathan Pingle. And we are going to hear from Bank of America CEO Brian Moynihan later today. That exclusive interview is coming up at 7:20 p.m. UK time. Looking forward to that.
Meanwhile, what is driving the boom in equity markets? I think we know. One banking voice is pointing to the appetite for profit among some investors.
We are definitely in a moment where there's more greed than there is fear, okay? And, you know, that's one of the reasons why people that need this capital are coming to the markets, because the capital's available. And so if you're advising companies that need capital, one of the big piece of base advice for 42 years of doing this, when capital's available, if you're capital consumptive and it's available, take the capital.
More greed than fear. Goldman Sachs CEO David Solomon speaking at the Economic Club of New York. We're going to dive further into the markets and bring you some calls next. This is Bloomberg.
Welcome back. We've done 45, we've done 30, now let's do 15. 15 minutes to go until the equity market open, and we are generally down, except for Spain, which looks like it's going to be moved higher by Inditex this morning.
Yeah, absolutely. That's one of the stocks we'll certainly be watching. We're also keeping an eye on the oil price. Of course, 97.74 is where we trade this morning. Oil is moving higher after US forces intercepted Iranian ballistic missiles and drones aimed at neighbouring Middle East countries. Joining us is Bloomberg's Abir Abu Omar, who's in Dubai, with a briefing on the latest events there. Abir, where do these fresh attacks leave efforts to end the war?
Good morning, Anna. So look, attacks against Bahrain and Kuwait in the early hours of the morning. Kuwait, as a matter of fact, coming out about an hour ago and saying that it suspended flights from its main airport because it suffered significant damage by those Iranian missiles. Bahrain a few moments ago saying that it intercepted drones and missiles. So this is happening just now. But in the broader picture, what we're still working under the assumption of is that a broader peace deal is set to take place if conversations between the United States and Iran continue. Now, an interim deal that we're monitoring should reopen the Strait of Hormuz imminently and extend the ongoing ceasefire, no matter how fragile it has been, for 60 more days until the two warring parties discuss some sticking points. Now, the sticking points remain the same. It's been the past 4 months. They've been pretty much the same, and that is Iran's nuclear program, its frozen assets, about $12 billion of those oil sanctions, but also Lebanon has emerged as a main sticking point for Iran. As a matter of fact, Iran yesterday said that it will not take part in further conversations with the United States unless Israel stops its attacks against Lebanon. A phone call that took place between Prime Minister Benjamin Netanyahu and President Trump suggested that President Trump dissuaded Netanyahu from sending troops to the capital of Beirut in Lebanon. Netanyahu said he agreed with that, but that the attacks against the southern part of Lebanon will continue. Iran obviously disagrees with Israel continuing its attacks there. President Trump also telling ABC News yesterday that he wants written concessions from the Iranian side on its highly enriched uranium, and Iran said that it has given verbal concessions in the past. We also know that previously it has said that it is willing to send this highly enriched uranium to a third country. That could be either Russia, Pakistan, or China. But for now, it's still wait and see to see if those discussions come back to the table and if the two warring parties will come to this preliminary deal that will open up the way for a broader peace agreement.
Abir, thank you very much. Abir Abu Omar in Dubai for us with a rundown of things as they are developing. Let's turn to the markets then in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore here in London with us. As we've been saying this week, Mark, good morning. So Abir there talking us through the Middle East events. That's pushing oil prices higher. We're back to worrying about inflation. I'm not sure it ever left our consciousness, but oil prices heading, well, back towards $100, it would seem. What are you watching in terms of that inflationary dynamic?
Yeah, I think in the very short term, yields should be higher again. So we're seeing yields higher across, everywhere today. And I think, if you take the US curve as kind of the benchmark, which is maybe debatable because they've got a different policy from the central bank. They're 3 basis points higher across the curve. I think in the short term, we can go higher again. I think everything in the very short term is quite inflationary. I think you've got strong data. The ISM was really strong on Monday. We had the JOLTS data, and the JOLTS data is very backward looking, but still it's showing that the jobs market is holding up. We've got this idea that the markets are very strong, and that at the moment the AI impulse is inflationary, even if it's ultimately the production boom is going to be deflationary, which is still in debate. And now you've got the Iran conflict flaring up. So everything in the short term suggests to me that yields should be going higher. Now, I do accept that the beta for the yield move to inflation is lower because there's a bit of a stagflationary kind of whiff around this impulse at the moment. So people are worried about if it is the Iran conflict that's driving it, isn't that quite bad for the long end? So I realize it's a bit more nuanced, but I still think the short-term dynamic today is yields higher, and obviously that's more problematic for things like gold, Bitcoin, other speculative assets like that.
What stops the US 10-year getting to 5%?
I mean, I think it probably will go there, but just not quickly. I think why
not quickly?
I tell you why, because it stops because there are enough market participants who have an interest in accumulating, coupon assets or fixed income assets that basically when they think that there's a reason to pause, yeah, exactly, they kind of choose a moment to pile in, and they tend to work in kind of tandem. So if you get to a certain level and they're like, okay, it's time to buy a load of fixed income, and then that's where you get these pause and these fixed income moves. It's why every single, we've seen this the last couple of years. We've seen a very steady trend in a bond bear market, and we're still in that bond bear market. We're still going to see much higher yields over the long term. But I think one of the lessons of the last few years is that it doesn't happen in a straight line. It happens quite violently, and then we get these dip buyers come in bonds, and they buy it, and we pause for another few months, and then we get the next catalyst, whether that's inflation or fiscal side. So I do think that ultimately we're getting there. I just don't think it's a rush there.
Do you think the moves into gilts have been relatively well bid in recent weeks here in the UK? There has been moves in. Maybe that's a kind of a repricing around some of the political risk. Maybe the markets have got over their skis in terms of how far the BOE might go in terms of their expectations. Are the gilt markets looking slightly distinct at this point?
I think in the UK, there's probably a stronger growth fear than other places. Yeah. It's how much can the Bank of England actually get away with hiking? If they, I think our colleague Ven Ram has literally just put something out in M Live only about 10-15 minutes ago, just kind of going hey, the Bank of England by Taylor rule can only do 35 basis points. So why don't you get the hike in as soon as possible? And that might stop them to do more later. But I think there's more of the kind of the growth concerns there. I think the UK is kind of weird that it's lost a little bit of its international sheen, but it still has a very strong domestic sector of long-term, real asset managers, pension funds, who need to, again, buy those dips at certain income reasons. So it's a kind of slightly weird dynamic that it gets more extreme panics, but it has a strong domestic bias to buy those dips.
Mark, thank you very much indeed. Bloomberg Markets Live Executive Editor, of course, Mark Cudmore. And a note for terminal users, Anna, Guy and I will be joining the Markets Live team for an event, Money and Macro, tomorrow, 5 p.m. here in London. Terminal users can catch that using the function Live Go on the terminal, of course. Let's get your stocks to watch this Wednesday and bring in Chloe Melee. Chloe.
Good morning, Tom. The owner of Zara Inditex could be on the move today after saying that it had seen sales growth accelerate recently. And so, of course, this could reassure investors that have been quite worried about the impact of the Iran war on retailers because of those higher energy and shipping costs and because of this weaker consumer confidence. But Inditex might actually be more resilient. It might be that its focus on higher-end fashion and on big flagship stores could have potentially paid off. And so we could see that provide a bit of a boost in the shares this morning. We've seen Inditex actually, as we can see here, underperform its closest rival H&M over the last year or so, but it could have that much needed lift this morning. Moving on to Switzerland, where we've got a very interesting story there, because the proposal to cap the population at 10 million is actually losing ground among voters. And so this could be very relevant, of course, for all of these big multinational companies, including Novartis, Roche, UBS and Nestle, that really rely on this international diverse workforce. And some of those companies have actually been already fairly outspoken about this, with the chairman from Roche saying that Switzerland cannot meet the need for bright minds on its own and that it needs those open borders. So that's going to be a very interesting story to keep an eye on as well as we await for the vote on June 14th. And finally, ASML is also in focus after receiving a new joint street high price target from JPMorgan, with analysts revising the estimates upwards quite materially, actually, and saying that consensus was well behind the curve. So this fits within, of course, this broader AI enthusiasm narrative that's really fueled that rally in ASML shares this year. And this really goes to show that this AI trade, this AI story is not going anywhere anytime soon. And so we should be keeping an eye on ASML as well this morning.
Thanks, Chloe. Chloe with a rundown there of stocks that could be on the move. We'll add to the list Partners Group. We talked about that earlier on, capping withdrawals on their global value fund. So we'll keep an eye on that one. And tariffs are back. Good luck trying to work out all of the detail, though, because there are so many exemptions within this new proposal that isn't quite a proposal yet because it would need to be approved. And it's not entirely clear how it rubs up against other US, European agreements on tariffs. So a lot of complexity in the detail, in the weeds.
So what do? Do you park that one, leave it to one side? Is that market moving today or not? I think we expected it to come back at some point. Is it already priced? I think it's hard to Anna's point, to kind of factor this into the individual stocks. I think sectors, we're still waiting for more clarity on things like the auto sector and what's happening with pharma and all that kind of good stuff.
And the broader narrative today is dollar up, yields up, and oil prices up again. Commodities under pressure, interestingly. Iron ore, copper, gold and silver, all under pressure. So we watch the basic resources as well and some of the mining stocks in the UK.
Yields are higher. Yeah, that's something to certainly bear in mind. But it looks like it's going to be Inditex that's going to be the standard. That's the one I'm waiting to see open. In the Spanish market first thing.
And we watch basic resources for another day because that was actually the best performing sector, fighting it out with technology. But both of those did pretty well in yesterday's session. European stocks were up quite strongly, but today could look a little bit different. We will come back with the market open, with the European cash trade. Futures are pointing a little bit lower this morning. This is Bloomberg.
Wednesday morning, couple of minutes to go until we start trading cash here in Europe. European equities are about to open. Yesterday's session, quite positive for Europe, up, let's call it circa 1%. We kind of climbed up towards the European close when it came to the US session, but then faded a little bit after it, which may explain why Tom's got a bit of red on the screen.
Indeed. Basic resources and tech, top of the list in terms of the sectors yesterday. Today, though, with the oil prices higher, the catalysts for further gains sidelined, at least for now. European futures then pointing lower by 0.4%. Tech and basic resources could perform well, though, within that context. FTSE 100 futures currently pointing lower by 0.3%. You've got pressure on copper and iron ore, gold and silver as well. So basic resources, in fact, could, as a result of that, be lower, I should say, given the fall in prices that we're seeing across basic resources. Tech, though, could still show some strength. IBEX, of course, in focus, given the strength that's come through in terms of Inditex's earnings, and that index is really standing out from the rest in Europe with gains of potentially around 0.2%. And presumably that's one of the stocks that you are keeping an eye on, Anna.
It absolutely is. So it's specifically what they've said about the most recent month that seems to suggest the start of the second quarter showed an uptick in sales versus the first quarter. So Inditex is certainly in focus for that reason. That's one of the stocks we're watching this morning. One of the others is ASML. Price target lifted at JPMorgan. They've suggested that the street's estimates for this business are behind the curve, so we will certainly keep an eye on the tech sector, although tech and basic resources did pretty well yesterday. And Partners Group gating one of its funds, the Evergreen Fund, gating the redemptions there as requests have risen. So we'll watch how the share price for that listed private equity business does. Guy.
Okay. Here we go. Really solid session yesterday. Looks like we're going to fade a little bit of that this morning. Looks like the IBEX is going to be in focus as a result of that Inditex story. Elsewhere, keep an eye on Bitcoin, keep an eye on what is happening with the precious metals. They may provide some weakness for the FTSE 100 in terms of some of the big mining stocks. So at the moment, we've got a FTSE that's flirting with flatline. Can't decide which way it's going to go. None of these markets are expected to be down by much. 0.2% to the downside, possibly. And that's kind of largely maybe what we're seeing already. The stock 600 is down by 0.1%, the FTSE is down by 0.2%. The CAC is down by 0.4%, but the IBEX, as anticipated, is up by 0.2%. So we have some green on the screen. And clearly nothing is happening in Germany this morning, other than a market that looks like it's kind of falling more than most. So I'm curious to find out why this morning the DAX is down by 0.8%, and the rest of Europe is fairly flat. So that's the picture we have at the moment. Nothing out of Amsterdam yet. IBEX is up, DAX is down. Tom.
And the IBEX and retail story, of course, there with Inditex. So Inditex lifting retail as a sector. That's the top performing sector so far. Gains of 1.4%. Tech is in the mix again. So building on the gains of yesterday, up 0.5%. Telecoms as well. You had a strong performance for the likes of Nokia yesterday. Telecoms again on the front foot as a sector, up 0.4%. But the clearest gains coming through for retail with that lift for Inditex. On the downside, autos, so there's your potential drag on the DAX then. Autos is the worst performing sector right now, down 1.4%. Anna, what do you see?
Yes, and I say this with question mark after it. Tariffs?
Tariffs?
I mean, that would be my go-to assumption when you see autos down quite so... Well, I would say they're down by 2%. This is VW, BMW, Stellantis. So our reaction function to tariff headlines is not what it was a year or so ago, but maybe it's there. As we were saying before the break, quite difficult to get under the hood of what exactly this latest 10% tariff threat means, because we don't really know how it rubs up with the Turnberry Agreement, which was supposed to cap things at 15%. This is 10%, but we've seen in the past efforts to layer tariffs on top of tariffs. So maybe we need other members of our Bloomberg News team to come in here and tell us about the detail.
So it strikes me, what's dragging Germany down is Siemens, in terms of the points this morning. It's down pretty hard. Allianz is down pretty hard. Infineon's down. So there's a range of stocks. Deutsche Bank's down by 1.7% this morning. So there's a range of stock stories that are having an impact on that market. And 10% sounds all right from an auto point of view, if that's where it stays. But I do wonder whether it's going to be a separate sectoral story that comes out of this. And maybe that is the assumption that people are making.
Yes, and there were exemptions for things that are already subject to a sectoral tariff.
Yeah.
But where we've got to on autos on that front, I confess I'm not sure. So anyway, we'll wait to see if this is tariff-related. As you point out, Guy, it's not just cars then. Autos and auto parts is the worst-performing sector, and the German car makers are the worst in there. But yes, if you look at the German DAX, then other things are weighing on the index. Let's try and get some clarity, shall we, about where stocks go from here. Nataliia Lipikhina joins us, head of EMEA Equity Strategy over at JPMorgan Private Bank. Nataliia, welcome to the programme. Thank you for joining us this morning. And you've just joined us as we've been, trying to work out what's happening to some of these auto parts companies. And I suppose the big question here is, can tariffs come back and shock us again? Can we be surprised by tariffs once again? I suppose this risk never fully went away.
Good morning. It's great to be back. I think it's fascinating to see where the market is opening today, and clearly the market takes it as a potential risk. But we clearly had a playbook from last year when we know how this can actually play down, frankly. I think what the market will be looking for, if that indeed is a story that is evolving, is the question mark how the corporates will be able to pass that through. Again, this is something that we saw already last year. Not really surprising that equities in Europe are slightly down today, because the market just remembers that European markets ultimately can be vulnerable to tariffs or any other shocks, including oil, that we saw earlier this year.
Yes, absolutely. So oil prices are higher as well. So that's the other thing that sometimes plays badly for Europe. So with all of that in mind, geographically, you prefer the US and emerging markets. Is that an AI story then?
It is indeed an AI story. And I think that was just reinforced yet again this earnings season. We're seeing a very strong AI demand. We're seeing very tight still supply. And the agentic AI, for example, is really accelerating. And the hyperscaler capex is also increasing. So we truly believe that we're in this earnings supercycle in the United States. We just finished the first quarter, or we're close to the finishing, and we're seeing a sixth quarter of the double-digit growth. It's pretty phenomenal. And we actually just recently lifted our S&P targets, and we think that the earnings growth in 2026 can be 20%.
And good morning, Nataliia. And that earnings supercycle in the US is not derailed by a continued closure of the Straits of Hormuz.
You're absolutely right. We're still seeing uncertainty in the Strait of Hormuz. But when I look into the US market, ultimately, tech is doing a very heavy lifting. In fact, the market expects 40% earnings growth this year. But it's interesting because it's not just tech. It's actually the other sectors that are also doing a bit of heavy lifting as well. So it's a nice combination between the two. Tech is the star of the show, but ultimately we're seeing revenue expansion, but also margins. Don't underestimate how important margins are ultimately for the earnings.
What is the biggest risk to that constructive, bullish view that you have on US tech over future quarters?
Yeah, I would say it all still comes back to the demand on the AI story. And every earnings season, I feel like we have the same story ever again, that we're questioning, is demand still there? Is supply still constrained? Are companies increasing their CapEx spending?
Do you get worried when you hear from Uber and others that they're starting to reduce their budget for tokens, for example?
So what the analysis that we have done, what we're seeing a very accelerating demand. And I think what is driving that is actually agentic AI. If I look into how, the market behaved in the last month, really, the question marks again were, is it another story, is it another quarter when demand is accelerating? And we got the confirmation that is actually very, very strong. Now, if that has to change, the story will change as well. But we're not seeing that yet. In fact, we're seeing constraint on the supply chain. And this is what I think is driving semiconductor further.
If I want to hedge my AI exposure in my portfolio, what do I buy?
In the equities market, you probably want to buy the countries or regions that have underperformed. But there is a big question mark, what happens in the Middle East at the same time? For example, there is a big story now, what happens if oil continues to go down, if the uncertainty in the Middle East fades? Then you probably want to leg into the markets that have underperformed. Europe, as an example. Luxuries, one of the sectors that hasn't done well this year. If we're to see a better situation in the Middle East, those markets can do better. But we're not there yet, in our view.
OK, but back to the question, how do I hedge AI exposure? If I think that the AI story is going to remain strong, but I just want to hedge that risk within my portfolio, how do I do that? I can see the argument around oil, but what do I do to position myself if we do get a 10% pullback, 15% pullback? What do I do?
Yeah, I would say that how we talk to our clients about that is make sure that you have a diversified portfolio. And what I mean by diversified portfolio is don't put everything in.
So what diversifies tech?
It can be oil. It depends what shocks can be in the system, right? If, for example, oil continues to go higher, it will be energy. Right. It can be looking into other industries, industrials, utilities. Utilities is another sector, for example. Yes, it's linked to the AI story, but ultimately the drivers can be different. So I think it's diversifying across sectors, but also regions is also quite important.
Nataliia, from a equity strategy perspective, how do you think about all of the IPOs that are going to come to market this summer? We are set for a wave of these big IPOs from a host of different tech companies over in the States. And does that detract money away from other things, or is this just additive? I mean, additive enthusiasm for AI. How do you think about the portfolio effects of this?
Yeah, absolutely. First of all, we think that the wave of IPOs is definitely showing that there is a restored investor confidence, and the market sentiment is actually rising as well. And ultimately, those businesses, they want to scale, they want to come and see a larger pool of investors. So we think this is a very strong confidence in the market, but also in the macroeconomic environment, which remains to be quite robust. Now, what we're looking into this at this point is understanding the credibility path, the profitability path of those companies. This is something that investors will look into. In terms of the overall story and thematically, we think that it's actually very additive to what we have been talking at JPMorgan Private Bank with regards to AI theme, for example. We think that AI theme has legs, and this is yet another confirmation that the story potentially continues. So this is what the market will be looking into. And from the portfolio construction perspective, as I mentioned, this is one of the themes that we like. And I think the series of IPOs that we're seeing just makes another confirmation that it's a durability of the cycle. What we heard the confirmation during the earnings season and with this IPO cycle is the durability of the cycle. Usually the cycles can be quite short, but we're seeing the semis are probably in one of the strongest cycles in decades.
Nataliia, in your conversation with JPMorgan Private Bank's clients, those conversations you have with them, it's an historic moment for these IPOs, these blockbuster IPOs. How are those clients saying that they plan to fund that exposure to those IPOs? I'm just trying to think about how the liquidity moves. What are they selling? What are they doing to try to fund that exposure? Have they got cash on the sidelines? Are they selling something? What are they telling you about that part of the story?
Yeah, the way we're talking about it is slightly different. We take a slightly different angle. We're trying to understand what does it actually means for the market, right? Will there be any selling pressure, for example, for the market? And when we look into the historic analysis, we're actually seeing even if there are very big IPOs, they actually do not disturb.
But there's no history, there's no heuristic for this moment.
Yes, I mean, maybe the terms of the scale, but at some point the scale was also there in the past. But I think, I'll give you an example.
Yeah.
If, for example, a company comes, it's a 1 trillion market cap, and it's a free float of 10%, can we see a bit of a selling pressure of the market? Absolutely. But the way we think about it is probably technical in the nature rather than changing fundamentally what is happening in the market. I think it's a very important point to make because there is a lot of concern in the market what it actually means for the market stability. We don't think that it creates instability. We actually think that there is enough capacity in the market to absorb that.
Nataliia, thanks for stopping by. Nice to see you. Thank you very much indeed for being here. Nataliia Lipikhina, head of EMEA equity strategy over at JPMorgan Private Bank. Let's take a quick look at what is happening with the European equity story. This is the situation we have. It's thus far some of the biggest stocks on the move in Europe. We do actually have a fairly positive picture for ASML this morning. It is up, as you can see, as the tech story continues. Autos are under pressure. Actually, some of the more derivative trades off the AI situation are down this morning, so it's interesting to see that we do have some weakness into Schneider. The standout story on the upside is the Zara owner Inditex. So let's start off with the details of all of these stories. Let's start off with ASML. Chloe, what are you up?
Good morning, Guy. As you just mentioned, this tech story, this AI enthusiasm story is continuing, and we can see ASML doing very well this morning, up about 1.8%. It also received a new joint street high price target at JPMorgan, with the analysts saying that there was more growth, that the consensus was actually well behind the curve. So there's expectations for more growth, for an even bigger rally for ASML, and so that is really driving that stock this morning. Moving on to another good mover as well this morning is Inditex, the owner of Zara, which has had a trading update saying that sales growth had accelerated recently, and so it's really benefiting from its strategy, which has focused on big flagship stores and also a refocus on higher end fashion rather than the very competitive low end fashion. And so this seems to be working out quite well, and this is actually quite a big relief for investors that have been a bit worried about the impact of the Iran war on retailers. And so we are up almost 5% there. Another also positive retail story is B&M, which is up very strongly this morning, 13% almost, and that is because it has said that the last year was actually quite difficult. It had to implement a turnaround strategy, but that turnaround strategy seems to actually be paying off, and it said that it is potentially returning to double-digit margins for B&M UK over the medium term, and that it would also be able to mitigate some of the costs associated with higher energy and higher shipping costs from the Iran war. So it seems that there's a bit of cautious optimism there from B&M, and we can see that reflected there. Moving on to Prosus, which yesterday had a big boost because of its shareholding in Tencent, but today it's a bit of weakness, potentially reacting to the European Commission extending its deadline for that company to sell down its stake in Delivery Hero at the time when Uber is becoming very interested in Delivery Hero. And so we're seeing Prosus down about 2% this morning. And finally, we also have some downward moves for partners after capping withdrawals from one of its private equity funds, and this seems to indicate that perhaps the anxiety around private credit is spilling over into other parts of private markets, and so we're down quite significantly there, more than 11% for Partners Group.
Chloe, thank you very much indeed on some of the stocks on the move this Wednesday. Chloe Melee, of course, with the details. Coming up, tariff comeback. The US proposing tariffs of at least 10%. The Chinese have been responding to that, saying there's no forced labour. That's on imports from most major trading partners, not just China, the UK, the EU, Canada, amongst others. We dive into the details next. This is Bloomberg.
Welcome back. This is the opening trade, and we go to Spain for some growth data. And if we're worried about growth in Europe, then maybe Spain is not the epicenter of that worry. Maybe we shouldn't have expected it to be, because we know the Spanish growth story has been quite positive recently. The composite PMI rising to 50.2. That's versus 48.7 in April, so that is up. And then you look at the services PMI, that is at 50.1 versus 47.9 in April, so that again is up. So both of these numbers versus where they were in April comes in higher than it was. But as I say, yeah, Spain was not the epicenter of concern with regards to the growth story.
No. And also, but to a certain extent, the inflation story, which I think will go into the prices paid factor. Talking of prices paid, let's talk about what's happening with Inditex. Shares higher this morning after the company reported a pickup in sales growth at the start of the second quarter, boosting confidence in the Zara owner's resilience in the face of weakening consumer spending on both sides of the Atlantic. Rodrigo Orihuela joins us now from Madrid. I see a consumer around the world that is under pressure. I see input costs, cotton, nylon, etc., going higher. How is Inditex able to produce these kinds of numbers, considering the headwinds that it now faces?
So there are a few factors. Obviously, they have a very specific and very unique kind of structure when it comes to logistics. A lot of their production takes place in what they call proximity markets. Basically, they have been doing nearshoring since before nearshoring became a trend. That helps them with freight in part. They are also really focused on cost cutting over the past couple of years. That's one of the reasons why their gross margin keeps going up. They posted a very strong gross margin today. They're very, very focused on that. And one of the keys also is they have been changing a strategy in recent years, focusing a lot on premium. On premium products, which is taking them a bit higher up in the consumer scale. They also have the strategy to focus on big stores that kind of have an own identity, and all the combination of things seems to be working and offsetting that weakening demand we see from some other retailers.
Okay, so Rodrigo, so it sounds like they've been doing a lot, you know, even before this most recent war in the Middle East, to think about costs and transport costs. How tough are companies like Inditex finding the retail sector, the retail environment at the moment? What more have we gleaned on that subject?
Yeah, so one of the problems we have whenever we look at numbers from Zara is that they give very, very little detail. They give very little granularity on what's happening in different aspects. So we can't really analyze directly the impact of the war in Iran, for example. The sector as a whole is clearly showing that the sentiment among consumers is changing, that it's becoming very tough. We've seen this with, for example, H&M, which is traditionally their main kind of peer or benchmark in Europe. But for Zara, clearly, if we look at the numbers they had for the previous quarter and also for the trading update for the first part of this quarter, those numbers are extremely solid. So they aren't feeling the hit in the same way others are. They also have the advantage because they're in so many markets and because they don't really have one single market that stands out as their main market. They have a big combination of FX impacts. And in this current situation, those tailwinds they had from FX in previous years are starting to ease. So you have the combination of they are not suffering from consumer demand as much as others, and they're also benefiting from an easing in FX tailwinds. Headwinds, not tailwinds.
Rodrigo, thank you very much indeed. On a day when the services PMI out of Spain comes in into explanatory territory, coming in above the previous month and above the forecast as well. Rodrigo Orihuela there on the earnings coming through for Inditex and the strength there for that company. Stock up, of course, around 4%. So let's get back to the stock story, but with a very different direction, because the stock is currently on Akzo. The paint maker is down 20%. This is on the back of news that Nippon Paint Holdings and Sherwin-Williams have ended their effort to buy the Dutch paint maker, apparently following the rejection by Akzo of two joint all-cash offers put forward by those two firms. This is according to the companies. They put a statement out this morning. So the most recent offer of €73 per share valued Akzo at 12.5 billion euros. That clearly wasn't enough for Akzo, and that offer has been rejected. And so this leaves Akzo with its continued plan to merge with the US firm Axalta Coating Systems, but clearly investors unwinding some of the price action. So currently that stock is down a full 19.5%.
Let's go back to the tariff story, which we've been covering through the morning. 8:23 here in London. The US is proposing tariffs of at least 10% on imports from most major trading partners. It follows an investigation into goods allegedly produced by forced labour, as President Donald Trump seeks to rebuild the sweeping tariff wall struck down by the US Supreme Court. We're joined now by Chief Asia Correspondent Ros Matheson with more detail. And maybe, Ros, you've had a little bit more time to look at how this is going to play out. But is this some kind of an attempt to go back to country-by-country tariffs, even by this kind of mechanism? How would you characterise what we're seeing here?
Well, certainly it does look like an effort to rebuild the tariff wall, and in a way that they did foreshadow, because, of course, when the court struck down Donald Trump's ability to use emergency powers, he says we're going to find another way to do this. And they used an existing trade act to put tariffs on in temporary fashion, but they're due to roll off in July. So they needed something a bit more permanent to hopefully come right at the end of that. So they've walked these steps, and they can then have these more permanent tariffs stacked on the end that are potentially more sticky when it comes to a legal basis. And so they've been doing a bunch of what they call 301 investigations, and one of them has been into allegations of the use of forced labour in these supply chains, and they've now wrapped those up, and they're saying we're going to impose tariffs on a bunch of places around the world, somewhere between 10% and 12.5%. For different areas, and obviously with a bunch of exemptions coming into that. There's a mention of different kinds of food, for example, some textiles, metals being exempt, but obviously it's going to just add to that very confusing patchwork that we've got of trade issues around the world. And the question is, how do countries react to this? Those that are in the final stages maybe of getting their trade deals over the line, some already have agreed to trade deals, all looking at this and saying, well, is this essentially just the US trying to reinstate what we already thought was gone in terms of those individual country tariffs? And are we going to have to again try and negotiate with the US about this one too?
What does this mean for China specifically? Because for the rest of the world, this is a kind of one-for-one swap. Europe is going to change these tariffs to the ones that came sort of after February. But China is a compounding effect. Do you think Beijing's going to have an issue here?
Well, that's right. Some questions, particularly for China in all of this. And also, of course, coming just so soon after that summit in China between US President Donald Trump and his Chinese counterpart Xi Jinping. Lots of pomp, lots of warm words, lots of sense of camaraderie between them individually, in a sense that they want to keep their relationship on a fairly even keel. But what this does is really remind us that underneath all that rapport and warm words, there's a fundamentally challenged relationship between the US and China, one that's got many points of tension, including around trade. And China, of course, would be very willing to retaliate against the US. It's shown that in the past.
Ros, thanks very much. Thanks for the briefing. Ros Matheson, keeping track of all the twists and turns in the tariff story for us. We will seek more detail there, of course. 8:26 here in London coming up. We've been talking about cars a little bit. We'll continue to do that, but not just cars, EVs, also AI humanoids. We will be speaking to the Xpeng Vice Chairman and President, Brian Gu, to learn more about the company's AI ambitions and its push into Europe. He's here in London. We'll get to that conversation shortly. This is Bloomberg.
Happy Wednesday. This is the Opening Trade. We are 30 minutes into the Wednesday session and risk off, but in the context of the gains that came through yesterday for the European stock space, currently down 0.3% across the benchmark. Oil is higher, yields are higher, and the dollar is seeing some strength as well. So those are some of the catalysts to the downside, or at least some of the headwinds for the European market space. You're also seeing some pressure across basic resources as well. The DAX down 0.7%. Autos are feeling the squeeze today. 0.3% is the move lower for the CAC 40 over in France. Spain is the outstanding index right now. The IBEX getting some support from Inditex. But here in the UK, the FTSE 100 is currently down around 16 points. Guy, what are you seeing?
Mildly risk off is what we're seeing in terms of the internals. 215 up, 367 down. So slight balance towards the downside in terms of how the stock 600 is positioned. Volume's a little light. Let's talk about the leaders. Let's talk about the laggards. I want to start with the leaders. Inditex, as Tom mentioned, definitely one of the gainers that we are seeing out this morning. That stock is up very sharply. We'll get to that in just a second. B&M is another one that I want to factor in as well. We've got a bit of a mix in terms of the stocks that we are seeing. Let's just focus on ASML. It is up by 0.9%. We've got an upgrade there. Other stocks that you want to be mentioning, AXO is on the move this morning. It is down very sharply. Partners Group, as we've been talking about in terms of what's seeing in private equity, private capital is down as well. And Wise back under pressure. Tried to bounce yesterday. Not doing so well today. Anna.
There you go. You got the graphics in the end, just behind you there, Guy. Let's talk about some of the other stories we need to keep in focus this morning. US forces intercepted Iranian ballistic missiles and drones aimed at neighbouring Middle East countries and struck a command centre in Iran in response. The exchange follows days of Israeli military escalation against Iran-backed Hezbollah in Lebanon, prompting a phone call between President Trump and Israeli Prime Minister Benjamin Netanyahu. The leaders offered differing accounts on what was agreed, with the US president initially suggesting a broader truce than his counterpart was willing to declare. Shares of Partners Group are falling this morning, as Guy was just pointing out, after Bloomberg reported that the firm is limiting redemptions to 5% of net asset value per quarter at one of its evergreen private equity funds. Private credit funds have been in focus in recent months, suffering large outflows amid broader worries over debt quality and exposure to software companies facing the risk of being upended by artificial intelligence. And Bloomberg has learned that SpaceX is planning to set the terms of its IPO as early as Wednesday afternoon in the United States. Reuters is also reporting that SpaceX aims to price shares at $135 each as it seeks to raise a record-breaking $75 billion. Tom.
OK, well, let's stay on that story and bring in Bloomberg senior strategist Neil Campling, who's been looking at this. Neil, what do you make of the details that we're getting then on SpaceX, what it means for the broader IPO pipeline on what will be and is squaring up to be an historic year?
It's looking like the amounts being talked about would be the biggest IPO raise on record by more than 2x the last one, which was Saudi Aramco. A few moving parts on this. The reports overnight are the latest valuation would suggest around 1.75 trillion. Doesn't sound like much, does it, compared to the 2.5 trillion we were talking about just a couple of weeks ago. Let's just pluck a number out of the air. Let's say it's $2 trillion. One thing that we need to be aware of is that there will be a lot of appetite from retail funds, but most importantly, the institutional funds. And by that, I'm talking about the ETFs, the passives. Now, there was a great Matt Levine opinion piece on Monday that I'd encourage everyone to read if possible, because he was explaining that there could be as much as 500 billion of demand from the ETFs, from the passive funds, if there was that kind of valuation metric of around $2 trillion. So it becomes less about potentially the valuation or the requirements for the IPO in terms of the dynamics around valuation, and it might be more about liquidity, which is something we've talked about on many occasions. Now, of course, you could also argue that SpaceX need to raise as much as possible because they are burning through so much cash, which obviously is an issue.
It's going to be interesting to see how the lockups work and kind of the time schedules around all of that and the availability of stock. Broadcom, what are you looking for later?
Broadcom, I'm looking for justification for the fact it's the third biggest contributor to the S&P gains this quarter. Street's expecting 47% sales growth year on year, a big number. But obviously AI is growing, as we know, at a massive clip. Now, we heard from one of their key partners just earlier this week, Alphabet are raising $80 billion in markets to help fund the AI expansion. So we'll get a sign of what's happening in terms of the AI demand for, in many respects, the alternatives to the NVIDIA ecosystem tonight, because Broadcom helps to create those TPU chips of Alphabet's, which is an alternative to NVIDIA. But certainly everyone's going to be looking for more data points. And we've seen from other companies, HPE and Dell and others, that we've got accelerating growth going on at the moment in AI servers. So we need to see similar trends coming through from Broadcom tonight, I think.
Yeah. Talking of retro, HP and Dell back in the spotlight. Neil, thank you very much indeed with a preview of Broadcom, of course, and the details around SpaceX. Bloomberg senior strategist Neil Campling. Now to the electric vehicle space, but more broadly, autonomous vehicles, robotics, flying cars as well. Xpeng reporting a 4% increase in vehicle deliveries in May from April. This comes as the Chinese company seeks to expand its footprint in Europe and grow beyond its EV routes. Very pleased to say we are joined now by Brian Gu, Xpeng's president and vice chairman, around the desk with us. Brian, thank you very much for taking the time. And to some extent, your journey, hot-footing it from Paris to London, then you say you're off to Chicago, tells the story about international expansion from Chinese vehicle firms and EV firms. And again, you're not just doing EVs now, you're thinking about robotics. But that is part of the story, that international expansion. How important is the UK market and the European market for you? What are your aspirations? What are your ambitions in terms of building out and shipping in Europe and the UK?
Well, very happy to be here, Tom. And yes, global expansion is one of the key drivers for our business today. Last year, 10% of our global delivery is actually outside of China. But we see that number climb to close to 20% this year, so representing a major increase. And also Europe actually is more than half of our overseas sales. So it's one of the most important, if not the most important market for Xpeng. And UK is actually, I would say, one of the biggest markets in this region. So for us, making sure UK is done right is the primary focus. And I think part of my trip here is to really push and accelerate the market expansion into the UK market. We launched last year with one product, and this year we actually have planned to introduce more products to the UK market, as well as laying out more sales coverage, partnership, and building teams on the ground.
Outside of the UK, you have a manufacturing agreement with a partner in Austria.
That's right.
Do you deepen that? Are you looking for your own factories? Are you looking to add more capacity and production capacity in Europe to meet the demand that you hope is going to come through?
Yeah, we have a current partnership with Magna in Austria, in Graz, which is doing very well. The capacity has been ramping up very, very nicely. And also we are looking to expand that partnership with more products to be manufactured in the site. We just awarded them with our 4th product to be launched in Europe. And I think, given our volume projections, I think we're going to increase our investments in the region. So we're looking at multiple opportunities and hopefully strengthen that capability for us.
Good morning to you, Brian. Great to have you with us. So you're looking at opportunities in Europe, and Tom's already mentioned the relationship you have with a contract manufacturer in Austria. Are you looking to develop more relationships with existing manufacturers in Europe, branded manufacturers in Europe? VW, for example, has recently said they're open to letting Chinese manufacturers, under certain circumstances, use unused plants. Are you talking to companies like VW?
Well, we are actively talking to everyone that we think brings value to our business and can provide a win-win solution.
So you're talking to German car makers?
We're talking to German car makers, we're talking to other European players. And also, I think this industry is moving towards a more partnership-oriented landscape. We have currently a very, very strategic relationship with VW on the technology side in the Chinese market. We also are having a relationship with Magna, for example, in Europe. So I think these kind of partnership will become a trend because I think the world needs to see the capabilities really complement each other and bring the best and leading technology and products to customers.
Are you getting pushback, though, from regulators, from politicians in Germany or elsewhere around this? I mean, the German car industry has such a sort of iconic status, and we're perhaps talking about a future here of cooperation, yes, but where just assembly takes place in Europe, but a lot of Chinese components and technology go into that.
Well, I think we're talking to a lot of governments and regulators around the world. As a company that operates in more than 60 countries, we have to deal with, all kinds of geopolitical issues every day. And I think that's part of doing business globally today. We have to be nimble. We have to react into whatever the new changes coming our ways. I think as a young company, that's actually our strength. We can actually react to this much quicker than a lot of the OEMs.
Do you meet people in Germany, though, who don't like this future? Who don't like the idea of this is how the relationship will be between Chinese and German car manufacturers? Are they trying to protect their own industry?
Well, I would say most of the people I meet actually are very interested in to find ways to collaborate and make things work better. So I think it's actually an opportunity rather than challenge for us.
Morning, Brian. We've spent most of our morning talking about tariffs, particularly US tariffs, new US tariffs that are coming in. Do you ever see a point at which the Chinese auto sector, will get significant access to the US market?
Well, right now it's challenging, to be frank. It's not just a tariff, but also other regulations that maybe limits our ability to provide software and connectivity to our vehicles. So all of that will impact our access to
You don't really have much access at all?
We don't have any sales in Europe. And in fact, I don't think any Chinese brand currently have access to the European EV market.
You mean US?
US
EV market.
US EV market.
Do you ever see that changing?
I would say it will take a major policy clarity in order for players to make large and long-term decisions. So I think it's difficult at the moment.
Does Europe get more Chinese cars as a result of that? Do more European buyers step up to fill that gap? If you're going to export more vehicles, because it's obviously a very competitive market you're in China, you're looking to export. Does Europe kind of take the bulk of the cars because the US isn't? Or is it the fact that actually you've got enough demand in the rest of the world not to worry about the United States?
Well, to us, I think we service a global market. Wherever there is opportunity and there's customer demand, we want to cater to that demand and provide the best product and services to them. So for us, if European customers like our product, like our services, we love to make sure that we have that provided to them.
OK, that's part of the future. Flying cars may be also part of the future. Humanoid robots as well. I remember 5 or 6 years ago, you guys unveiled the flying car, and I remember you said to me, look, this isn't a gimmick. We really are committed to this, and we're putting real money behind it for the long term. Where are we in that story around flying cars? And does it become a real revenue stream by the end of this decade? What numbers are we talking about? Where are you selling into? Who's interested?
It's actually much earlier than by the end of the decade. Actually, we aim to receive our final product approval for our flying car by this year. And we'll aim to manufacture, sell, and deliver to our end customers, hopefully before the end of this year. So that will be actually commercial reality in
customers
China.
Being where? In
China first. And then we're obviously looking to expand outside of China. I mean, that is actually the power of AI today, is to accelerate the development of these physical AI products and become commercial realities.
And when I go onto your website, there's a nice video that cuts together images of fast cars with very pensive-looking, is that the right word? I'm not sure, but pensive-looking humanoid robots. So talking of physical AI, is there a global market for humanoid robots that you're pursuing as well?
Well, I think a humanoid robot is a phenomena that's currently already global. I mean, you can see players in the US, in China, and elsewhere.
Asia seems to be making the running perhaps on that particular space because we've got so many companies waiting to list in Hong Kong and elsewhere with humanoid robots.
I think it represents a major opportunity because humanoid robot is the ultimate physical AI product. And it actually can have wide applications in our lives. Our robot, Iron, is actually one of the probably most human-like robots. And then we think the reason we designed that is to be used in human environment that can sit here, interact with you, can present as a sales agent, receptionist. So I think the application...
It's nice to have you instead, though.
Yes.
Well, you will still have me, but you'll have a lot more productivity with the robot next to me.
Bring this guy next time, yeah.
One final quick question on inflation. How much... What's your chip rate of inflation? Are components available? Kind of what's happening in terms of the supply chain right now? What rate are you having to pay versus last year? Can you just give us some clues as to what is happening here?
Well, I think supply chain fluctuates pretty significantly over the years. So we have seen shortage in batteries a few years ago. We've seen some, low-end chips shortage during the COVID. And today, I think obviously it was in our product being very smart and intelligent. We also have to deal with the memory chip shortage or price increase as well. So
how much are you seeing?
Well, I think it's very similar to the rest of the industry.
Yeah, okay.
It's probably
dramatic.
Dramatic increases. But I think the good thing is that it's a relatively smaller component of our cost versus phones.
Brian, it's great to see you. Thanks for stopping by to see us. We really appreciate it. Thank you very much indeed for your time. Brian Gu, Xpeng, Vice Chair and President. I just want to quickly show you what is happening with dollar yen. We've seen a few movements over the last few minutes. As you can see, you are seeing a little bit of a pickup on the yen. We're getting some comments coming through from Takeichi as well, talking about what is happening with the FX story. Keep an eye on this. We certainly will. But we were talking earlier on in the show about the kind of the 160 rate. We got quite close to it. And that has triggered some degree of intervention.
Right, and saying that they are, reiterating the lines we've heard before about taking appropriate steps on FX, but then repeating lines around cooperation with the United States, checking the US in particular. I wonder if that's added something to the market's reaction function here.
Yeah, and we know from recent history that the current Japanese government has, including the finance minister, has collaborated and cooperated and communicated quite closely with Scott Bessent. So interesting that they're calling out the US on that front and working and affirming with G7 excessive moves are bad for the economy, the Japanese Prime Minister. There's a lot more coming up. Stay with us. This is Bloomberg. The yen strengthening right now, 159.67 versus the dollar after Prime Minister Takaichi commented on FX policy. That happening just in the last few minutes. Let's bring in Paul Jackson, Bloomberg's Japan economy and government editor, standing by in Tokyo. Paul, a modest move then in the yen. What exactly did Takaichi say to move the currency?
Well, I think earlier you made the point that she referenced cooperation with the US. You can see that headline saying they would deepen cooperation, international cooperation, including with the US. I think those kind of comments will put investors and speculators on edge. You see the movement in the yen that followed. That looks like the kind of margin that comes from a verbal intervention that has scared people, but not actual intervention itself, I would say.
We're expecting Ueda to speak later today. What do we watch for there? What should we be thinking about?
Well, that's a good question. I mean, markets are expecting the Bank of Japan to raise interest rates later this month. So does he really need to signal that in his speech today? From the perspective of Bank of Japan policy, he doesn't really need to say anymore. I mean, obviously, if he wants to hold off on raising interest rates, then he must put the brakes on the market today. But we don't. That's not a baseline scenario. We're thinking they will raise rates this month, and he'll be hinting at that in the speech today. From the wider perspective of Japan's policymakers, of the government there, it'd be kind of handy if he made it a slam dunk that the rate hike will take place and gave some hawkish language around it, because that would be a fillip for the yen. And as we can see, it's right on the edge there, near that those levels where intervention has taken place. And don't forget, they've already spent $74 billion trying to prop up this currency in the past month.
Paul, thanks very much. Paul Jackson, Bloomberg's Japan economy and government editor. Let's widen the conversation, but perhaps start with Japan. Bloomberg Markets Live strategist Mark Cranfield is part of the M Live team, of course, and in London with the rest of them this week. So very nice to see you in person, Mark. And I feel like I've spent years talking to you about Japan at a distance. So now let's have that conversation face to face. I mean, we've heard there the briefing from Tokyo. Are we gearing up for a rate move then from the BOJ?
It is almost fully priced in. Maybe that's what Ueda is going to do, as Paul was saying. Maybe he's going to push that little bit extra to make sure the market is fully convinced that they're going to go by 25 basis points in June. There's a little bit more to do to make sure investors are convinced about that. The issue really is about the forward guidance, whether or not. What investors have got used to is the idea Bank of Japan raises interest rates. There's a long gap, and then they do it again. And they're gradually moving towards so-called neutral rate, but they're still a long way from it. So you've got negative real rates in Japan. That's partly why the yen is being used so comfortably as a funding currency. People don't really see that changing in the near term. Were he to surprise and say, well, not just a hike coming in June, but we need to back it up with something more aggressive near after, that would be a surprise. It's a low-case scenario, and that's why the yen isn't moving very much. If he was going to be really aggressive, dollar yen will be down to 156, 155, something like that.
Mark, you've also been writing about Bitcoin. What happened to the strong hands? The weak hands are giving in. Where are the whales? What's going on with Bitcoin?
I think it's partly a story which started months ago, as gold was the first problem for Bitcoin. When gold got much more exciting, Bitcoin gradually lost its appeal to people, and you could see there was a direct correlation. As gold went up, Bitcoin was going down. So it's been a process for some time. Now you've got some of these so-called long-term investors starting to, not very large amounts so far, but the fact that they're pulling out slightly obviously dampens enthusiasm for it as well. Plus, the AI story is so much more exciting in the equity space. Why would you be in Bitcoin when you can make 20% in a month or more in other spaces? Put all that together, that's not very good. And now you have this classic setup, technical setup. A lot of people dismiss price patterns, but Head and Shoulders is one that people tend to agree on. And it's got a horrible, it's got a horrible bearish Head and Shoulders technical setup, which most people just can't ignore.
I can make a lot of money in the equity market, though, as you say. The debate is bubble or not. Where does the Cranfield stand?
I think the SpaceX IPO is a very important point for the whole thing. What we're having is a valuation boost at the moment. So SpaceX has put projected valuations up at such a level, everybody else has to come up to try. They're getting a boost because...
This is ironically a gravitational effect for a space, yeah.
Exactly. But meeting those expectations is going to be the tough part. Investors are going to say, show me the money. OK, I put money into you at these exorbitant forward valuations. I now want to see something on the table in terms of your revenues and your profits.
Yes.
If there's a mismatch for too long, people are going to say, we don't like... And that SpaceX is a big enough one for people to short.
Yes, but is it the right test case for AI? Because it's AI, but it's also a whole lot of other stuff, like space.
It's a disguised AI story. That's all it is. It's all about data centers in space. It's completely unproven. How many data centers can you put in outer space and still make money? That's what people are being asked to believe, basically. If that's not quite right, it's going to fall down hard.
Okay.
I think Guy Johnson just rebranded Mark as the Cranfield.
I think so. I think that just happened.
We should go with that.
We'll have to
the
put
Cudmore,
that.
the Cranfield.
That's your new Bloomberg title. That'll be on the screen next time you're with us, Mark. Really good to see you. Thank you so much. Bloomberg Markets Live. Mark Cranfield, or the Cranfield, as Guy's been calling him. Let's get back to the private market story, because this is something that we spent a lot of time talking about at the beginning of this year, and then it sort of faded into the fabric, into the landscape, I suppose, a little bit. But Partners Group putting it back once again in focus for us, because we've seen a cap on redemptions from Partners Group, according to our reporting, and the stock now down to a 2020 low as it capped redemptions on a particular PE fund.
Yeah, limiting redemptions to 5% of net asset value per quarter, and they had seen demand surging in terms of requests to 9.8% in the second quarter. Switch focus, because later today, former UK Health Secretary and possible Labour leadership candidate Wes Streeting will be speaking with Bloomberg's Francine Lacroix on stage at South by Southwest London. Follow that at Bloomberg.com. Terminal users can catch it on Live Go. Currently checking back in on your broader market picture. European stocks currently off 0.4%. US futures largely unchanged after fresh record highs yesterday. That is it for the opening trade. The Pulse is up next. This is Bloomberg.